I love sell-off days because they show us very simple where the relative strength is in the overall market. We can go and spot pockets of strength. And the reason we do that is relative strength works. On days like happened on Friday where they sell off kind of everything in the market, well, the areas that either weren't sold off as hard or held up, those are the areas that are probably going to be strong going forward because it means that when everyone panicked and ran for the door, then these are the areas in which money flowed into, or at least money didn't flow out of. So just showing where the institutions are kind of placing their bet. One thing that we do over at StatsEdge Trading is we use algorithms for all of the trades we make, right? I have the back test here going back 25 years of what the system looked like. I have each individual month going back 25 years that you can see, and you can dive into some of these setups and learn about them, what we're looking for. So this is the idea of relative strength with our trend following type system that is again looking for relatively strong names. A video from me, and again updated here for January, and now we're probably going to be in February. I would imagine a pretty good month for trend following as a whole. Also, our pullback system looks for relative strength. It looks for things that are strong on week one and then looks to take a trade on them week two. And again, you can see I update all of these numbers monthly as new data comes in. So if you're interested in that, again, go to StatsEdgeTrading.com and check those out. In this video, we are going to focus on what is doing the best, on what areas of the market are the strongest, so that we can kind of be prime next week. StatsEdge Pro members, right after this video comes out, I do all the numbers. I'm going to tease one of the setups to you guys, but I will send all 30 symbols, entry price, exit prices, stop losses, all over to them. So if you're interested in trying that out, again, go to StatsEdgeTrading.com, give that one a shot. Now, what we're looking to do here on the S&P 500, and we're looking to do here is now analyze not only the market, because a lot of the markets, right? If I go Dow, if I go Qs, right, MDY, they all have this big candle, and that candle is more important than anything else that happened this week. What I've done is I've highlighted a couple sectors that I think could tell us if this is going to continue or if this is just going to be a little bit of a flash in the pan. But first of all, one of the indicators I have down here, let's take a look at the Dow. This is the rate of change for one day. So it's basically how much does the market move each day. A big spike up means we had a big up day, big spike down, big down day. You can see, you know, pretty bad from a 1 day rate of change, in which was almost as bad as this down day right here, and almost as bad as this day, which was that FOMC day that got everybody scared. However, after those days, look at what happened in the market. After those days, we've got up moves in both cases. So I think Monday is going to be a very important day, because if we gap up and then sell, maybe some continued downsides to come. But if this is treated like all these other sell-offs were over the last year and is just being bought up, then it was just another buy the dip moment. Again, these buy the dip moments are something that continue until the moment they don't. And the way I look at it is you always take advantage of them. If you see the trend of when the market sells off for a couple of days, people come in. We have systems, our pullback system, our mean reversion system is what we've been leaning on for those, and it will work until one day it won't. And then you'll get stopped out of a whole bunch of positions, and that will be a really bad day. But if you're managing risk correctly, all the other times that you did it and it worked will outweigh the one time that you did it and it didn't work. That's the way I look at it, right? Is every party comes to an end at some point, but I would rather be there when the party comes to an end and be kind of sad than to have missed out the party entirely. Now, what are the signs that I'm looking for that potentially could reverse the market? Well, first of all, I think crypto may hold the key here, where as long as we're holding this support and we are bouncing off this support over and over and over again, then I think we are going to be strong overall, right? So I'm recording this on Saturday. So this bar right here is the Saturday bar, and you can see we're already bouncing. The reason for that is that if the market is entirely risked off and scared of everything, I do not think that crypto is going to hold up, right? Eventually, if the market sells off, it's going to bring crypto down with it. And crypto is essentially just a risk asset. Moves up when people are feeling good and they're risk on, and then moves down when people want to own real things and is risk off. Now, don't get mad at me, crypto bros. I own Bitcoin, but it's just one of those things. It moves like a stock that is more risk averse, like a small internet company, more than anything else. And you can see that in the data. Take the correlation of Bitcoin compared to the S&P 500 or compared to the Qs, you'll see this over time. So if Bitcoin continues to hold this line and pushes up, I think that's going to be a bullish sign for the overall market. Some areas I think to keep in mind when I went through and I looked at my relative strength, which I have over here, that kind of shocked me that I think we need to watch going into next week is one is MSOS. Actually, so this is Friday's candle. Not down very much. I think actually maybe, down 1 cent on the day. So I don't know. I've been watching this low base here for months on MSOS. I haven't taken a trade yet, but I'm just watching, right? We undercut this kind of 325 low we've been at for a long time, rallied up to retake it, and now we're holding. I don't ever think the marijuana sector is going back to where it was. I just don't think that's ever in the cards. However, these oversold bounces can be really profitable, right? This one here was from $7 to $8 on a percentage basis. That's pretty good. So I'm watching this sector. How I might just play it, I don't know. I might just look to see if we get a breakthrough here. But I guarantee you, if we get a nice break and then a pullback, that will probably be on one of our algos. So that's mostly how I'll play it. Every now and then I like to take these shots in these ETFs. And MSOS is an interesting one. UNG, also very, very strong. Full disclosure, I own a bunch of natural gas here, but this one, if we look at Friday's candle, closed up on the day and didn't have that red candle. That's the one. Again, this is makes my relative strength journey really, really easy this week when I'm doing my analysis, is because just show me stuff that was up or at least not horribly down, then I think I'm onto something. So UNG, this area of support, I think it becomes really interesting. It's the most important when it comes to that overall sector. Now, one of the things that started all this, I thought, was the whole news on UNH being investigated for whatever. You guys know I don't really read the news, but I was on Trader TV and they were talking about it. It seemed bad. However, not, they bought this candle. So we saw the SPY, right? Big red candle, sold it all on Friday. Uh, UNG or UNH being in XLV, I think it's the second largest component in healthcare, which is this sector right here. Nice push up. So something I'm going to watch going into next week. This is the anchored VWAP from all-time high. So essentially representing what the person that bought at the worst possible time, where their trade is. And their trade is actually doing okay. So if we can get through that, that's a bit of a sentiment shift. It means pretty much everyone is now back to the green on healthcare. So sentiments are good. Sometimes things grind higher. So we can take a look at that as well. Now, what I would like to do, and what I'll probably spend more time today doing, is diving under the hood and saying, okay, if UNH had a really bad day, but XLV actually did okay, then must be a bunch of other stocks under the hood that held us up. So that's something that I think deserves a little bit more of a deep dive. If we look at GLD, gold just continues to hit highs. So I'm watching this one. If the market turns here and the market starts to push lower, then this may take a pop out of this little base and will continue just that gold, flight to safety. People want to be safe trade. But however, we take a look at FXI, we take a look at China here. China's holding up pretty well. And I look at China the same way I look at Bitcoin, where people, if they are very worried about long-term risks in the market, the kind of thing that makes the market sell off the way it did, I don't think they'd be putting their money into Chinese stock and Chinese names like Baba. I just don't think that's very risk off behavior. I don't think that's where people go and say, "Oh, I'm worried about the market. Let me pop it all over to China." Most of the time, you'll see movements into XLP, which did do good. This is consumer staples, think General Mills and things like that. And generally speaking, they'll go into gold. They generally don't go into China, and they generally don't go into Bitcoin. So the fact that these sectors are holding up makes me think that this is not something to be super scared of. However, if we continue And I think the worst case scenario would be a gap up and then completely fade on Monday. Then again, we need to start looking at these lower levels around 580 or so. I did this giant study and I shared it with you guys in a video earlier this year that said year 3 of a bull market is usually choppy. It could just be more of that. We could just be working our way into the low end of the range and then back up again. Who knows? Maybe we break the highs and then break the lows and break the highs again. That would be a market that would frustrate most people. I would love it because a lot of our pullback and mean reversion algorithms thrive in that kind of really choppy environment because we're bidding under the market. So speaking of, let me show you guys just a couple of the setups from the StatsEdge Pro that have me interested. And if you want more, again, go over to StatsEdgeTrading.com. 30 of these symbols, roughly, if all the algorithms have 10 symbols each, that will meet it every single week. Also, access to our Discord room, in which we have a bot that will just ping your phone or your watch and say, here's the entry, here's the stop loss, take a look, see if you like it. If you like it, take the trade, that kind of thing. One here is TW, TradeWeb Markets. You can see the candle it had on Friday. I talked a lot about how one of the setups in particular, two, I would say, really look for relative strength. If it can get through these highs right here, that's the trigger price. Again, that will be alerted in that Discord if it can get through there. The idea behind this is we're just trying to trade this particular name and just trail it behind a moving average just to stay involved as long as we can. This is a really strong name. Udemy had great news this week. So if this can pull back into this zone right here, if we do get a couple days of pullback on the SPY, that would be an interesting place. And that's where the algo is looking. That's the kind of thing. And the beauty of it, again, is we don't need to guess, right? We know that if this triggers, if we like the way it's looking, then we get involved. We have stop loss, we have an exit, all of that sorted. So the reason I do all of these analysis is I want to see in real time when it's time to pull the trigger. I just know where the market is. I know what the feeling, what the sentiment is in the market. I would say the sentiment is right now that people are a little bit scared. I don't see a huge reason to be. We've got a lot of area to get through before things get bad. So those are the warning signs that I'm looking for. That's what I'm looking for going forward, and a little bit of a sneak peek of what we do over at StatsEdge Pro. So thank you guys very much for tuning in. Kind of have your plan. This weekend is the time to do it. People call it building your shopping list. I love that idea. Go through all of the stocks in your portfolio that performed well. You're probably onto something with those. Look at all the stocks in your portfolio that completely sucked. Maybe you got to reconsider those. And then just start going through your list. Anything that held up strong, anything that had buyers that came in later in the day when the market was selling the way it was, I think you might be onto something there. And as always, until I see you guys next time, get away from the screens.